what I'm going to do today is, in terms of the presentation, uh, let's try to make it as much interactive as possible. Anup, can we arrange a couple of mics if somebody wants to ask questions? Yeah. So wherever I'm going, if I'm rushing, you have any questions, please ask. It will be very nice, because see, when we try to present here, there are so many thoughts behind it which you may not have, but you will ask very simple questions, very basic questions. And I'll tell you something, one thing that I've learned in my life: questions are never silly. Questions are never silly. So please ask the simplest of the question, that you have to challenge everything that I'm saying. Ask why this, why this, why this. That's your biggest tool. Okay. Essentially what I've done is that I've done the presentation into three large components. I'll talk about some of the investment themes that we believe why in India what's going to do well. That's one part of it. Second, if somebody is doing direct equity investing, like people like me, or even if some of the other direct investors, how do we evaluate those businesses? So just give you some gist of that. And third, some of the investment products and why investing is important, right? So we'll just start with that. So, today if you see today, almost 65% of India's economy is all largely services. But looking ahead, we strongly believe that the manufacturing will be at the forefront, and the manufacturing growth for the next 5, 7, 10 years will be much faster than the overall India's GDP. Overall India's GDP itself is going to be higher than most of the other countries that everybody knows now, right? The whole world has accepted it, even faster than China, the growth number. But within that, the manufacturing as a sector is going to do far, far bigger. And I'll tell you the reason for that, because there are two big mega themes that are playing out. First, it is the domestic consumption story, right? And this domestic consumption story is actually all about the Gen Z and the Generation Alpha. It's all people like you out there, right? And this is very different kind of consumption that's going to happen. In fact, I tell my team that from consumption, we have moved to consumerism. The difference between consumption and consumerism, the way I interpret it, is that consumption is where you are consuming from your savings, and consumerism is where you are actually spending from your future income, right? So we are actually going on that path. The way the credit cards are there, the way the buy today, pay tomorrow, BTPL or all those kind of products are coming, and the way they are getting embraced by all the, I would say, the entire population is amazing. So this consumerism is something which is going to play out big time. So people are going to consume more and more and more. And the other very big theme is in terms of the China plus one, Europe plus one theory, right? Global customers, they all have been buying big time from China and also some bit from European countries. Now they have very clearly decided that global supply chains need to get actually, they want to de-risk themselves, and India is there in their radar, on their radar. There are at least 7 or 8 industries, okay, which is auto and auto ancillaries, specialty chemicals, pharmaceuticals, engineering, within engineering, hardcore engineering, electronics manufacturing, textiles, and power equipments. At least these 7 or 8 industries, we have seen that the domestic manufacturers have earned the right to win, because they have the domain expertise, they can deliver the global scale, and they respect the intellectual property rights the most compared to the Chinese counterparts. Thanks to this, all the global customers are looking at Indian companies to source their requirements. Global supply chains are really looking at India as an alternate. I'm sure some of you are thinking what will happen because of tariffs, what is happening, because today India has got so much higher tariffs compared to other countries. Let me tell you, a lot of this is noise. Okay, because all this thing will also reverse as quickly as it has happened. Pretty sure about it, because today as much India needs world also needs India. So don't even have an iota of a doubt what will happen to India. India is going to grow. How much you are going to participate in it or not is the question that you have to ask yourself. How much hard work you are going to put in it or not is the question you have to ask yourself. How much you are going to invest in it or not, you have to ask yourself. So don't even have an iota of that doubt. India will continue to do well. Government is taking all the steps. If you see this PLI scheme out here, the way they have it has got reciprocated. I can't think of any scheme in the last 10-15 years which has got so much of positive reciprocation from the industry side. Any schemes that the government come, not many times the industrialists are actually very happy with those schemes, so they don't participate it wholeheartedly. But PLI scheme is something which government designed, taking inputs from the industry participants, and that is where they got a super duper response. So PLI has taken off. If PLI is taking off, which means tremendous amount of manufacturing, tremendous amount of exports, all of that is actually going to happen. And this is what I was talking about, the consumerism. So you can see today, for example, about 2 crore bikes get sold, 2 crore two-wheelers actually get sold in the country, bikes plus scooters, right? Out of that, about 65% is bikes, maybe 35% is your scooters. But the best part is, of this 2 crore, only 10 lakhs is 350cc and above, which is your Royal Enfield, right? Which is an aspirational product. So only 5% people have been able to afford. But as we progress, as the interest rates are coming down, as there is more access to finance, as there is more ease to finance, as the GST rates have come down, more and more people will go for premiumization of products, right? Effectively, when you move from even if 2 crore bikes remain 2 crore, but instead of 10 lakhs, there are 30 lakhs, 40 lakhs of 350cc and above. By default, the value of the growth is there. You know, just the volume may not be there, but the value growth is going to be significant because of premiumization. Similarly, if you see, say for example, in cars, today 65% of the market is already SUVs, right? If there are 40 lakh cars, 4 million cars that are getting sold every year, already 65% of that is SUV. Exactly, maybe 7 or 8 years back, it was less than 30%. You can imagine the premiumization that has happened over there. Second, whenever a company, say for example Maruti has the largest market share in this country with about 40-50%. Whenever a company like Maruti is selling a particular model, in that model you will have 4 variants, right? Like if you buy a car, say like Swift, within Swift there will be LX, LXI, you know, those kind of 4 variants they will have. Around 10 years back, whenever they used to sell a particular car which is doing very well, the maximum variant used to be base plus 1, right? So there is base plus 1, base plus 2, and then top of the line, right? Today the maximum amount of volumes is coming top of the line minus 1. So again there is premiumization, because everybody wants a fully loaded car with all kinds of features. This is what I talk about, from consumption to consumerism, right? So what I'm trying to tell you is, and the other very important part is that as the people's income levels are rising, and if the inflation in the product is not rising at that same pace, if it is rising at a lower pace, then what you could afford 3 years back, today you can afford much better, because the product price has not risen as much. What? So this is where this consumerism is happening. I mean, this is exactly what you can say. Like for example, today the fastest growing category among consumer durables is air conditioners, right? The room air conditioners, that's the fastest growing at about 20% plus. Now, today the penetration level in this country of room air conditioners is extremely low, right? And I can tell you the way the life cycle evolves. There about 20 years back, most of the houses would maximum have one AC in a bedroom. Then it started with, as people went to bigger house, it went to two bedrooms. Today the ACs are there not only in bedrooms, they are in the drawing rooms, and also they have entered kitchens. So from same house, what had one AC, now you have 5 to 6 ACs. That's the kind of the penetration that's happening across. And plus when you have central ACs and all of that is separate, right? So what I'm trying to tell you is this is what consumerism is all about. The other very big theme, I think nobody knows it better than you guys. It's all about digitization. It's all about AI. Whether you're booking an Uber, whether you're using a Google Map, whether you're ordering through Zomato, whether you're ordering through Swiggy, whether you're ordering through Blinkit, whether you are book my show tickets, everything is completely linked to this, right? So this is something again a very important aspect. And today, as portfolio managers, as fund managers, we are worried that if we don't have businesses which are linked to this, we will become irrelevant. Why? Because the consumers are queuing up over there. Consumers are there where all these technologies are there. You don't even realize that you are using AI. You don't even realize that you are so much digitized. Now nobody wants to go to the bank. Everybody is doing everything on the app, right? So that's the kind of the product that we are seeing today in this country, and this is something which is very critical to keep ourselves relevant, right? For example, if I don't have a UPI payment, whether it's Paytm or any HDFC bank or whatever, I become irrelevant when I'm going out for any shopping or for anything else, right? So to remain relevant, it is because this is where the consumers have not only accepted but they have embraced it. They are completely into it. Day in and day out, it becomes very challenging for each of us if some of our Wi-Fi's are not working or some of our apps are not working, right? So if the consumer is day in and day out there, our portfolios also have to be as relevant. Like for example, Nika. I mean, how many? I remember there was a time when Shopper Stop used to have that large that Mac and all of that for the beauty products, and there used to be so many people walking in, walking. All of a sudden, that has completely dropped. I guess most of the people are there on Nika, right? So these are some of the things that we should be fully relevant about. Energy, again, today the way the climate changes are occurring, the way the challenges are there, and everybody in the country and in the world, except Mr. Donald Trump, has embraced this new energy, whether it is wind or solar, and this is truly seems to be the future. Okay, so the entire ecosystem around it, for example, even the transmission cables will have to be completely different or maybe big time modified. So all these power equipment companies are going to have a very positive impact, whoever has those kind of products. So companies also will have to be relevant, right? To remain relevant, they will have to evolve themselves into this some of these new trends. Unless, like for example, I was talking to a manufacturer in Vapi or Valsad, and they said that now 30% of their power consumption is compulsory coming from renewable sources, right? And the idea is to take it to 60, 70, 80, 100, right? Today those roof solar panels are becoming common when you move out of larger cities, right? So those kind of things are very critical, and we believe that these are some very key trends which is going to like what has happened with mobile, right? So when mobile came, when I and Anup would have taken our first mobile, we in fact I was the one in our office when somebody read a futuristic article and said that we will start using mobiles like our laptops, right? And I said I don't think I will ever be able to do this, because laptop is a good big screen and it's a nice thing. Mobile तो इतना छोटा है, ये screen में कैसे होगा कुछ email? How can I send an email? And I don't think now I open a laptop at all. My entire everything works just on the mobile. So that is how futuristic and how evolvement all these things happen. So what I'm trying to tell you is that it is very important to be extremely mindful about some of these large mega trends that are happening. So whether it's manufacturing, digitization, on the new energy, whether it's renewable, Again, what you are seeing here is the tremendous. See, the other best part is that in the last 2.5 decades that I've been tracking actively or working actively in terms of the investing side, for the first time we feel that the government is seized of these opportunities, whether it is this China plus one, whether it is manufacturing, whether it is renewables, whether it is your digitization. Like UPI is a case study for the entire world. So many countries are coming to India to say we want to implement UPI, how can you help us, right? UPI is the ultimate revolution that the world has ever seen. So what I'm trying to tell you is that government is also extremely cognizant of the fact that these are some of the opportunities, and they are really trying all their best for doing things. This is something, again, I'm sure most of you are aware of this financialization, because I think bank FDs for decades and decades were the only saving product on the financial side. And this has completely changed in the last 10-15 years. It's a paradigm shift. It's an ultimate paradigm shift. The way the SIP culture has happened in this country is mind boggling, right? Like, for example, I play tennis. So all my tennis markers, all my ball boys for the last 7-8 years, they all are just doing SIPs in the index funds. Whatever I tell them, they'll just invest. Like somebody just started a gold fund about 6 months back, right? But they all are very happy just doing an SIP, because they are also realizing that the inflation is so high that putting the money in the bank FD is not happening. Even more than that, when I see people of that economic strata, it becomes very difficult for them to actually accumulate money in a disciplined way. SIP is something which is allowing them to just have it without any applying any mind or any other distraction. Because if they are able to save money in their bank account, there's always some distraction to get it used. There are always compulsions in terms of their needs, right? But this money just doesn't come to their bank account and immediately just gets swiped out. Is something what is really helping them to create a corpus. It's not only about returns, but it's about creating the corpus at the end of 5 years, 7 years, 10 years, 15 years, which they would have never happened. So what I'm trying to do is this SIP culture is an ultimate paradigm shift, and I'm sure all of you guys have a very big role. You're already playing a big role. I was just talking to Anup, the kind of the numbers that you guys are doing is brilliant, and I'm sure we have still not even I would say it's not even the tip of an iceberg. I think there is so much more that's going to happen. This is going to be like crazy. Most of us can't even imagine it's going to happen, because even today, say for example, total total fund flows in the mutual funds annually will be in the range of about 4 to 5 lakh crores. NPS, PPF, all of that coming to equity will be another 3-4 lakh crores. So about 8-9 lakh crores, right? Annually. Now the total deposits in the banking system must be close to 170 lakh, 180 lakh crores, which is growing at about 10 to 12%, which means there the new money coming is another 18 to 20 lakh crores. And that 180 lakh crores itself is so large that a good part of that will just keep on shifting. Plus the new flows out of that 18-20 lakh, even if another 10-15% of that shifts, this 7 lakh crores will immediately become 12 lakh crores, right? What I'm trying to tell you is that it's going to be crazy. When we try to think about it, we ourselves worry that are we really dreaming? Are we really daydreaming too much? Will it happen? But the fact of the life is that these things happen so slowly, but they are such mega trends that we don't realize. Like for example, the SIP. Like when Anup and we were together at India Infoline, we used to really think this SIP कितना छोटा छोटा करके, but छोटा छोटा करके इतना it has become so important that no mutual fund, not a single mutual fund, forget mutual fund, even people like who are us in alternate, which is PMS and AIF, where actually our minimum ticket sizes are 50 lakhs and 1 crore, even there we have started giving that option. Like the SEBI doesn't allow us to take less than 50 lakhs, but we take 50 lakhs, we create a liquid fund every month, 5 lakhs, that option, because that is what is the need of the hour, right? So no mutual fund, no alternate can think of surviving or even growing without an SIP kind of a product, right? So this financialization has become very critical, and I think the way even the NPS culture is evolving, right? If they are saying that 80% you can withdraw, right? That's the new proposal. Also, if they are saying that you can allocate 100% equity instead of 75 to 50%, to my mind, the next big SIP, the next big revolution is happening in NPS. Because I'll tell you why. It is the only product today in this country which is EEE, exempted at the time of redemption for taxation. It is a tax-free money at the time of redemption, because in mutual funds, whenever I exit, I have to pay capital gains. Whereas in NPS, the 60% of the money which is today and which they are making it to probably go to 80%, only the balance 20% annuity will be taxable. But if they make 80%, which I can withdraw anytime after probably 60 years of my age or something like that, I think it's going to be crazy out there. One cannot even imagine the kind of the money that large family offices, the individuals, the corpus that will get built. In fact, I'll suggest, Anup, you should really seriously think about NPS as a product and how you're going to play that out, because NPS is going to be very big if this 80% proposal actually goes through. And I'm pretty sure it will go through, because I think it's already in advanced those things, right? So financialization is another very, very important thing. The other very important thing is the way the insurance product get completely. I mean, now there is so nice way of doing insurance, because about 25 years back, 30 years back, if you'll ask your parents, most of the people would have their insurance policy and it would be an LIC policy. And LIC never had an insurance policy, to my mind. I'm sorry to say this. It was always a savings product. They used to always tell people, you put so much money every year, after 25, 30 years, you will get so much money back. Now, because they had to give the money back, even if at 5%, 6%, 7%, 8%, whatever, Jeevan Shri used to have 8%. But because of that, they never give you an insurance cover, right? So this term insurance and ULIPs and all of that is a great evolution to my mind. So I think this financialization is a very, very big important aspect which has actually played out. Equities, I mean, that's like always people's, it always attracts everybody at some point in time. And as today also we know that the kind of the growth that we have seen across all the brokers, NSE, BSE, CDSL, NSDL, the entire ecosystem is actually booming. So which is natural to my mind. But the most important thing is channelizing investors' money in the right products, depending on their profile. So that's the most important thing, right? So this was some of the themes which I just thought I'll share with you guys in terms of how you should be looking forward, where you should be mindful about, where are we headed, whether it's manufacturing, whether it's digitization, artificial intelligence, whether it's your, and these are not just words anymore, right? Because you're actually daily using it, whether it's your Google Maps, whether it's your Uber, whether it's your Zomato's, Blinkit, these are all digitization and they all are working on AI, right? Or say some of these data centers now, that's another big adopter and an enabler of AI. And this is all actually happening. Energy, new energy, green energy is also a reality, and of course financialization. Now this is the second part of the presentation. So this is where I'm going to talk about, say, in terms of at investment philosophy, this is more to do with us. How do we approach in terms of investing? There are multiple roads to reach heaven. This is the path that we have chosen. This is what suits our DNA. So this is what we are thinking. So basically we are very clear. So, just to give you some background, I mean, we are SEBI registered portfolio managers and alternate. I work with a firm called Emkay Investment Managers. And what we think about doing here is only long-term investing. And when we say long-term, effectively we say that whenever we are buying a particular business, whenever we are investing in a particular stock, we would like to own these businesses for at least 2 to 3 years. And over a period of time, if the business is going in the right direction, then we would like to own it for as long as possible. And just to give you an example, today nearly 70% of our portfolio, 72% of our portfolio is now 7 to 10 years of vintage, which means we bought these businesses about 7 years back, 8 years back, 9 years back, 10 years back, and we still continue to do. So that's the kind of the compounding that we bring to the table for our investors. And why do we do this? Because we strongly believe the fun of investing is the game of compounding. We all talk about compounding, 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 but what is this compounding is also very important. And as we move ahead, you guys will realize. But for this compounding to happen, most important thing is you should have very low churn in the portfolio. You can't be just buying, selling. It doesn't really work. You have to basically bet on businesses which you believe will become very big in the next 5 years, 7 years, 10 years, 15 years, 20 years. If you believe that these businesses will be able to participate, like for example, if you believe that Zomato and Blinkit can become very big in the next 10, 15 years, you should invest in a company called Eternal, right? If you believe that pharmaceutical companies, as people's healthcare requirements are increasing, as people's awareness is increasing, you should invest in some of the pharmaceutical companies. If you believe that India can be a major manufacturing hub, you should invest in some of the companies which have very large exposure to some of the industries, whether it is textiles, whether it is in terms of your power equipments, whether it is in terms of electronics manufacturing. Like for example, today we are the largest exporter of Apple phones, so those kind of things, right? So that is what you should be thinking about. The other very important aspect of our investing is that we would like to have a very focused portfolio. So in a particular business, we just have about 20 odd stocks. 18 to 22 is our number of stocks. This really helps us in basically understanding and knowing why we are owning these businesses. We are able to ride these businesses during the difficult times because we exactly know that these are just temporary challenges, maybe 3 months, 6 months, 9 months, 1 year, maximum 2 years. But if I think next 3 years, 5 years, 7 years, 10 years, these businesses will do much better. They have the right to win in their own industries, right? So that these are some of the very important things that we are focused about. The other very important thing in terms of investing, and when you particularly want to do compounding, it's all about quality and quantity. We never compromise ourselves with any, because if I'm owning a business for 7 years, 8 years, 9 years, if I'm buying something that is in fancy today, that is in something fashion today, those things will keep on changing every 3 months, every 6 months, every 1 year, 2 years. But if I have to stick with the business for 7 to 10 years, the business has to be very solid. The products have to be so solid that the consumers change in preferences will not matter, right? For example, say Pidilite. For example, say you or say for example, say even a company like say Zomato and Swiggy. There are only two players now left in food delivery. Rapido is just coming, but I think it's going to be still very small. Or say within your quick commerce, you just have 3 or 4 players, right? You have Blinkit, you have Instamart, you have Zepto. I guess only 3 now. So when you know that these are the only 3 players, and within that the largest market share is today Blinkit with 40%. In food delivery today, Zomato has about 55%. So when you have this kind of things, you know that this is where the stickiness is there today, right? Or say for example, say HDFC Bank and ICICI Bank, right? Now these are banks which have invested the maximum in the technology. Their apps are probably the best. Their net worth, their size is so big that everybody feels very safe with them. They have expanded big time in terms of their branches across the country. About 10 years back, 15 years back, 20 years back, State Bank of India had the biggest moat in this country, because wherever State Bank of India branches were there, they were probably the only bank in the remotest of this country. Today, wherever State Bank of India is there, it could be the smallest village, but both HDFC Bank and ICICI Bank will definitely be there. So they have expanded themselves in terms of their branch distribution, in terms of their digital innovation, in terms of their technology investments across in terms of products being relevant with the current consumers. I think all of that they are way ahead of time. So once you know some of these businesses are going to be there, those trends have to be identified, and these are quality businesses with quality management. The other very important aspect when we talk about quality is also the management, right? So this management is something Anup would remember. Some of you may not be even probably born those days when we were in 2000, 98, 99, 2000. There were so many companies like Himachal Futuristic, Global Telesystems, Silverline, DSQ Software, and these were all 4-digit stocks. They were all 2,000, 3,000, 4,000 rupees per share. Today, all of them have vanished because the promoters were ultimate crooks, right? They actually have destructed minority shareholders' wealth. In fact, if you see in the last 13, 14 years also, there are at least 150 to 200 companies where investors have lost serious amount of wealth. Companies like Yes Bank, companies like Divan Housing Finance, companies like Manpasand Beverages, companies like PC Jewelers, and the list is long, right? So the most important thing here is that you have to avoid mistakes. And what are some of these key mistakes? The key mistakes are in terms of management quality, in terms of taking undue risks, having very high concentration. That it's not good to have a 5-stock portfolio. You should have at least, I would say, 20 plus. 18 to 22 is a good sweet spot. Having too much 60-70 stocks is also not very appropriate, because then you are not able to actually focus and do things. So I think these are some of the very important controls that one should really focus on. Again, how we look at and evaluate each of these businesses, we are extremely focused about in terms of the P&L, where we actually start with cash flow. No, we don't start with the P&L, but we actually start with cash flow, because cash flow is something what is very difficult to manipulate. You can do window dressing of the profit and loss statements, you can do window dressing some bit of the balance sheets, but cash flows are very, very difficult to manipulate. There are certain examples where cash flows are also manipulated, but those are truly outliers. That's like less than probably 0.5%, 1/4% of the companies. 99.5%, it's very difficult to manipulate the cash flows. The other very important thing is that invest in businesses where you see a large opportunity, because Indian economy is all about growth. Indian stock markets respect the most where there is growth, right? So whenever that you see that there's a large opportunity, like for example, I was talking about Blinkit, Instamart, Zepto. Why? What is their market? Their market, actually, what are they doing today? They are just replacing the kiranas, right? Or say DMart. DMart is also very large, because what are they offering you? They are offering you minus 20% to MRP, right? Which means today whoever is buying from local kiranas who doesn't offer you a discount, they will try to plan their stuff, go to DMart and buy stuff, right? Because they are offering you value, which is where the opportunity is so large, right? So many kirana shops, all of that coming to DMart. Imagine the opportunity. And wherever you will not be able to plan, you will buy through the quick commerce companies, whether it is Blinkit or your Zeptos of the world. So both these companies are actually replacing the kirana and getting all the business. So that's the large opportunity that we are seeing, right? Or say for example, even say, like as I was explaining you, this two-wheelers, right? Today already 2 crore two-wheelers are getting sold every year, and out of the 350cc and above, which is the Royal Enfield, that's which the company which has 90% market share in that segment is only 5% today, right? As that keeps on increasing, imagine the kind of the growth longevity they have. Plus on the export side, already Royal Enfield is today exporting to more than uh, 10 to 15 countries in South America, in Europe, and also some of the Asian countries. And in each of these markets, over the last 10 years, they have established themselves, and they now have 10 to 15% market share, right? So this large opportunity is also very important. The other very important aspect is in terms of having a very highly profitable business, because when I say on one side that we have to want growth, growth and growth, but for growth to happen, we have to actually invest money. So for that investment, if that money is going to come from your existing business, if your existing business is highly profitable, then we will be able to grow, having not only grow, but we will have quality growth. Because just growth is not important. If you are growing by taking loans, it may impact you at some point in time. If you are growing by diluting your equity, it may impact you at some point in time. But growing from your internal accruals, from your internal profit, will actually make a very strong foundation for a high quality growth, right? Management quality, as I mentioned earlier, very important. And then of course everything is good at a price, bad at a price. So you have to also evaluate that, are we buying at a good price, right? I'll just share with you in terms of management quality how we guys evaluate. So you can see here, what we are trying to say is that we all do analysis of, in terms of the cash flow, P&L, balance sheet, whatever is available in the annual reports. But there are a lot of softer issues that we want to focus on, right? So we say, for example, and this is our proprietary module, this is truly one of its kind, because when we talk about management quality, it is a bit of a subjective thing. And if you have to make it an objective exercise, so these are all publicly available data points. So we want to evaluate, say, management integrity, management capability, wealth distribution to minority shareholders, investor communication, and liquidity, right? Yeah. So these are 4 or 5 very important points that we want to evaluate on. Just giving you some examples. So for example, in management integrity, what we are trying to say is that investing is a game of probability, right? And we have to keep on reducing our probability of going wrong. In investing, it's not about hitting a six, it's just about avoiding mistakes. As long as we can avoid mistakes, we will reach our goal. So for example, what is the promoter's stake in the company? If the promoter has a high stake in the company, they will do, they have higher skin in the game. So which means that they will do everything right for the company. They will not do anything silly. They will not try to take the money out of the company, because it is all their own money only. Suppose somebody has 65-70% stake in the company, they will not try to siphon out any money, because they have so much more skin in the game. So higher the promoter shareholding, always better. Promoter shareholding, have they been increasing or decreasing that stake? If they are continuously decreasing the stake, it is not a very good sign. So these are some of the very important aspects that we are very much focused about. Who are your auditors? Are they among the big four? Known, unknown? That's also very important. Promoter shareholding pledge. From the heydays of Satyam, we have seen that whenever promoter shareholding pledge has been disproportionately higher, it has compromised minority shareholders' interest, right? So we are very cognizant of some of these facts. Management capability, we are focusing on balance sheet, right? Because every business goes through a good and a bad cycle. How did the management maneuver that business during the difficult times is reflected in the balance sheet, right? So you look at the debt equity ratio. Within the debt, you will look at whether they have long term debt, whether they have working capital debt, whether they have sorry, whether they have forex debt, and if they have forex debt, is it unhedged forex debt? Like I remember in the year of 2008 and 2009, so many companies, again I would also blame bankers equally, because bankers went and missold that product to a lot of corporates, and they made them take forex debt thinking it's a very low interest rate. But the currency depreciated so badly in the next 2, 3, 4 years that so many companies just went belly up, right? So this is something what one has to be very careful evaluating the balance sheet, whether they have long term debt, working capital debt, whether they have forex debt, and if they have forex debt, is it unhedged forex debt? Or say whenever they are doing a project, what is the capital cost efficiency? For example, if somebody is setting up a solar plant today, or say if somebody is setting up a data center today, for every 1 gigawatt, every 1 megawatt, it takes them 45 to 50 crores. But if somebody is setting up and they say no, it is costing us 90 crores, 100 crores, is something mismatch, right? Because overall it will reduce your profitability, it will reduce your return on equity. So all these things you have to be very much aware about. Wealth distribution. So again here, very important aspect in terms of dividend payouts. So a company like say Hindustan Lever, Nestle, they pay out 100% of their profits. Whatever profit they are earning today, the entire 100% is paid out to the investor. Why? Because that is the quality of the business. They don't need to keep the money to reinvest. Their business can just keep on growing on their own brands, right? And also which shows that every profit that they are showing is very real. So these are some of the very important aspects when we look at wealth distribution. Or we have seen that companies will do very well in their existing business, then in terms of trying to grow, they will go and actually do some large acquisition. And whenever do a large, what is a large acquisition? Say more than 50% of your current balance sheet size. Whenever they do a large acquisition, 8 out of 10 times it has not played out, right? Say for example, when Tata Steel bought Chorus, it's more than probably 15 years, it is still a drag. Tata Motors bought JLR, it is still a drag. Bharti Airtel did a 12-13 billion dollar African acquisition, it is still a drag. And these are all 10-15 years, these are the leaders in each of their industries, and they did such large acquisitions, and it has not helped them. In fact, it has pulled them back. Say Sun Pharma buying Ranbaxy. So these are all serious challenges that we have seen whenever these kind of things are happening. I think so. This is something what I already covered, that we have to focus on the return on equity, inherent profitability, and all of those kind of things. There are certain red flags. So, for example, wherever promoter shareholding pledged is more than 70%, avoid investing in those companies. Wherever there is a debt equity of more than 2.5 times the balance sheet side, avoid investing in those companies. Wherever there is a large acquisition, avoid investing in that company at least for 1 year. After 1 year, you are happy to go and revisit those companies. You can also avoid investing in companies where they have too much unrelated diversifications. So these are some of the things that one should be very much aware about, right? So this is very much, I just thought this is the end of my second part of the presentation. The third part, this is all about personal finance, and of course I'm sure this is also relevant to some of your clients. So I just thought I'll share this. Savings is very important. It's not about how much you earn, it's all about how much you save. And some of you might just think that when salaries are very low, it's very difficult to save and all of that, but it's just about having a habit. It's about creating a culture. It can be as small as 100 rupees a month, as small as 1000 rupees a month, as small as 10,000 rupees a month, doesn't matter. It's all about creating that culture. Once you have that culture, once you have imbibed it, it is very critical, right? It will be extremely helpful, which is what SIP culture is all about. Sorry, right? And then after doing that saving, I think the other very important thing is that how do you channelize that money? Where is that money actually getting rightly invested, right? Because compounding and compounding, we all understand. And second part is in terms of the asset allocation. These are two very critical things when it comes to channelizing your savings. Because just doing savings and keeping money in the bank fixed, I mean entire 100% in the bank FD, may not be a very prudent thing, considering the inflation, considering your lifestyle changes, considering the growth of your own family sizes. All of that, if you have to take care of all of that, you have to invest right? So which is where we all talk about in terms of compounding. I'm sure some of you might have known this. Einstein himself said that eighth wonder of the world will be the game of compounding. And what is this compounding? So if you see this table here, this is very interesting. Just the 10% and 12%, assume at money growing at only in that, if you see those green boxes out there, if you take 10 years and 15 years, the numbers are mind-boggling. Even at just 12%, and 12%, it's 5.5 times, right? Somebody is investing today 10 lakh rupees, becomes 55 lakh rupees in the next 15 years at a very average number of 12% compounded. And if you take it 15%, it's almost 8 times, right? So which is what Anup was mentioning, like for example, in the last 12 and a half years, when we have grown the money at 17% compounded, it has grown to now 7x. 100 has become 700 for our investors, and with extremely low risk, with a beta of 0.85, 0.9, extremely low churn, less than 15% churn, more than 90% of our profits are long-term capital gains. The actual tax payout is only 1.5%, which means when 100 has become 700, of that 600 rupees, only 8 or 9 rupees we have paid as tax. So that much is that much low tax leakage. Plus we have so much of grandfathering because of 2018. So all of that is very important when you consider compounding, and this is what, like I was talking about, that I believe that NPS can become very big. And when there was this sovereign gold bonds, it was very difficult for me to believe that a product like this is available, because the government of India was giving you sovereign gold bonds, giving you the market appreciation, giving you tax capital, giving you 2.5%, and also telling you zero tax. Unbelievable to my, absolutely unreal. And now all of you know, after they close, what has happened in terms of the gold prices, right? Even tax-free bonds which were there probably in 2019, 2021, it was looking like unreal. How can a government give you sovereign at 9.5% tax-free? And that was the peak of the interest rate cycle. So not only you earn 9.5%, and those were 10-year, 15-year bonds. So you not only earn 9.5% tax free for first 3-4 years, then the interest rates went down. So your bond prices went up by 20-30%. So your effective yield was as good as an equity product with absolutely no risk. So keep on looking for those kind of opportunities which are extremely tax efficient, where there is some kind of compounding and relatively low risk. Very, very important. So what I'm trying to tell you is that always keep on asking yourself, always keep on thinking yourself, that where is the risk adjusted return very favorable for the next 2, 3, 4, 5 years. That is something what is extremely, extremely important. So asset allocation, finding the right products for that asset allocation is also very, very important. These are all the products which are available. I'm sure you guys are fully aware of this. You guys already have this, so I don't have to say much. This brings me to the end of my presentation. Thank you for your patient hearing. We'll be very happy if any of you have any questions.